Good morning, everybody. Happy Thursday. It's September 5th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for Daily Bites. We come at you every Monday and Thursday. Of course, but this Monday we didn't have a Daily Bites because of the Labor Day holiday. Hope you guys all had a nice long weekend. We were, of course, greeted on Tuesday with a little bit of a nasty market. Markets were down sharply. More than 2% on the SP 500 and also on the Nasdaq. And yesterday we tried to get a little bit of a recovery, but we did sell off towards the end of the day. It was a mixed day mostly, but by and large, it was I would say chalking up as a negative day. So what are we looking at this morning? ES futures are down about 7.5. They're bouncing around now. They're down 8. We were down about 2 or 3. Then the ADP number came out about 20 minutes ago, and the market sold off. And then the jobless claims number came in a few minutes ago, and a couple other numbers, and they bounced the market back to a small loss. But it seems the market is currently in this what we call a distribution phase. So what is a distribution phase? It means when big institutions like hedge funds, mutual funds, charitable trusts, banks are in the selling mode, right? Distribution means give out. Accumulation means take in, which means to buy. So we're either in an accumulation mode or a distribution mode. So it seems right now we're in a distribution mode. So what does this mean? It means you've got to be careful. You got to be cautious. You have to have some protection on. You have to raise cash. We've been doing it a lot in the chat room. We've been doing it in the service as well too. You've got to have protection on in order to stomach some of this volatility that the market is giving you. Now the VIX, for its part, is about 21%. I want to show you a chart of the VIX futures right now. And you can see here that the current VIX reading is this green line up here. It is above all of the futures out to April, right? Look at that. It's even above that wacky October one, which is just before the election. We noticed that one, many months ago, how the October one is pricing in chaos in the markets around the election time. But even though you go down in November, December, January into April of next year, we are above that level right now. So somebody asked me, well, Bob, what's it going to take to get that VIX down below the futures? Well, what we've noticed over the past couple of years, certainly since 2022, the release of news tends to ease the pain. Whether it's good news or bad news, doesn't really much matter, right? It tends to ease the pain of the future. Remember something. The VIX is about implied volatility, what the future volatility of the market is going to look like, right? So once the anticipation wears down or goes away, right? So for instance, tomorrow we have a jobs report coming out, 8:30 in the morning. So as of today, there's a huge amount of anticipation by the market players as to what that number is going to be. We really don't know. Is it going to be bullish? Is it going to be bearish? Is it going to be positive? Is it going to be negative? We don't know, right? There's an estimate out there. But as we learned this morning with the ADP number, sometimes those estimates are bunk. They don't really mean anything. They don't work, right? And the markets will respond accordingly. Now, what I've found is that leading into that number, so we'll be watching the overnight action in the futures. If the market has a nice strong bid coming into the day tomorrow, the number is somewhat irrelevant, right? Because when there are buy orders stacked up to come in there and start buying the market, it'll be the attitude of good news is bad news, or bad news is bad news if the market is going to go down. Or on the opposite, when there's buyers lined up, it means good news is good news, bad news is good news as well too. So we may see a bit of a, if the number is poor, we may see a bit of a sell-off and it would turn right back around again. Again, I'm trying to anticipate or handicap what it may look like tomorrow. I'm not making any predictions as to what the market is going to do overnight. I'm just telling you, keep an eye on what's happening on the futures market, and we'll see. And if that's the case, we will see this VIX drop sharply, maybe not get below some of these other futures. Because remember something, when the VIX comes down, it also drives down the futures as well too. Okay, so unless you get some sort of enormous move in the VIX, and what could cause that? Well, we have a Fed meeting coming up in a couple of weeks, right? That could cause certainly a big drop in volatility. Now, the interpretation of that, whatever the Fed decides to do during that meeting in September, is going to move the markets as well too. It's going to move volatility. It's going to move the markets as well too. So some are looking at this weaker, perhaps, jobs report as a stoking the flames for a 50 basis point rate cut in September. I'm not so sure the Fed really wants to go into that zone right now, unless we have negative number coming out in tomorrow. If that's the case, then I think the Fed needs to step up and start being a little bit more cautious or concerned at this point in time, especially if there's 100,000 to 120,000 jobs being created, according to what the ADP said. If the estimates are correct for tomorrow's report, it's 160-something thousand. If we're up in that 160,000 range, the Fed can continue to take a gradual approach towards easing monetary policy. I've been saying all along, I think they're going to do 2 cuts this year, maybe one in September, and then maybe the next one in December. I don't think that they're needing to do any more than that. Market is anticipating 4 rate cuts this year, and I don't think the Fed is going to be done with their interest rate cutting policy until 2026, probably March, April, or May of 2026. So it's going to draw it all out for a long period of time. So that's my view. I want to show you some charts as well too. So I did mention the VIX, right? The VIX had a big shot higher on Tuesday. Tried to get down yesterday and bounce back, and we're seeing the VIX just off the highs this morning. It's about 21.25, right? But one of the things that drives the VIX, volatility of VIX, and you also see the SKEW. All right, so 2 things I haven't talked about in quite some time. We're going to discuss these charts right now. So here's the VVIX, the volatility of the VIX, right? And so when this is on the rise, it basically tells you that people are reaching very heavily for protection against the VIX. So it's saying that the VIX is really starting to get moving, right? And when the VIX is starting to get moving, it means the market is starting to get moving. So this is what we call the second derivative of volatility. So the VIX, the VVIX, and you can see that big moonshot here back in August. Remember, we had that big down day on August 5th, and prior to that, a couple of days before, we saw the VIX VVIX start shooting up. Well, on Tuesday, we had the same deal. We had the same the VIX VVIX shot up higher. It shot up a little bit yesterday. So we got to watch the trend of the VVIX here. If it starts moving upward, it doesn't stay up for very long, but when it shoots up, it's like a punch to the gut. It's going to feel really painful for a short period of time until it wears off. Now, the second chart I want to show you is called the SKEW index, which is $SKEW, right? Now, what is the SKEW index? These are basically outlier bets by people looking to make big money on small dollar purchases. What does that mean? It means basically, there's a lot of speculators out there that are buying out of the money puts, mostly out of the money puts, but not out of the money calls, out of the money puts, because they're cheap right now, and they think that the volatility is going to rise up, and there's going to be some increasing value in those out of the money puts. So what is an out of the money put? Well, if Apple is trading at $217, you might see the SKEW capturing somebody buying the 205 put, which is $10 or $12 out of the money. Let's see what First Solar, $215. You might see the SKEW index capturing somebody buying the 205 or the $200 puts. These are out of the money, far out of the money puts, that when the SKEW index starts to rise, there's interest in buying these. This is telling you there's interest in buying these out of the money puts. So it's very good information. When the SKEW index is rising, it means that most people are getting prepared for a market that is going to go down. Okay, and we saw that back in the early part of August. Late July, we hit a low level of 128, and then we started to rise up here, and then people started to get even more bearish. We pulled back down here, and the last couple of weeks of August, which were poor for the markets, except for the last day of trading on the 30th, we've seen this SKEW start really moving higher. So, according to this indicator, according to this the SKEW, there are people out there getting prepared and ready to buy some protection, buy some puts out of the money, because they think that the value of those cheap puts is going to go up sharply. Now, I will have to tell you that people who do this, it is a very low probability bet. It is a very low probability trade. They're not making a lot of money on a regular basis. And in fact, I would say on a percentage basis, the SKEW predicts winners about 20 to 25% of the time. So you're going to lose 4 out of 5 times, maybe a little bit less than that, if you're trying to follow the SKEW index. But this is just good information for you to have an understanding of where people are putting their money. All right, that's the SKEW. So we touch a little bit about the VVIX, the VIX, and the SKEW. Let's take a look at the new highs and lows on the New York Stock Exchange, and we can see here that they weren't pushing up really high at the towards the end of August over here, and you can see that they still reflect a good healthy numbers here, even though some of the big names like the Mag 7 or the FANG names, some of these other ones are not reaching new highs. In fact, some of them are way below new highs. Look at Google, look at Apple, look at even Tesla, look at NVIDIA, of course, it was way below 25-30% below its all-time highs. So those stocks are not participating, but we are getting some good participation from other names like in healthcare and in banks, finance, also in housing and materials, staples, and non-discretionary and discretionary stock. So I mean, look, I'm looking at Walmart. That's a name that just recently hit a new all-time high as well too. So still pretty healthy breadth over here. Oscillators went negative on Tuesday, and they've stayed negative for a couple of days here now. If the markets don't recover today, we'll probably see more negativity on those numbers. We are not oversold on the oscillators. I will show you that one right here. This is the Nasdaq McClellan oscillator. It's at -70. You know, we get really super oversold when they're like in the -250 to 300 range, like we were in August over here. We get really overbought when we're at +350. So we were +350 back in July, -325 in August, and of course, if you net those out, it's about the zero line. So that's kind of where we had. But we have volatility is starting to come in the oscillators over here, like we had back here in June. And when volatility starts coming in, and those bands narrow, the Bollinger Bands were wide and they start narrowing like this, stay there for a little while, it means that there's probably going to be a big explosion where those bands start opening up soon. That's what happened back in July, and it also happened back in August here. Okay, so we need a few more weeks to burn off to see if the volatility starts to settle down here over the next few weeks. I know a lot of people are expecting a very bad month of September, because historically that's where we're at in seasonal weakness in this time of year, September into October. But we have to pay attention to what the market is telling us, and not necessarily what history is telling us, right? We can use history as a guide, but only use it at arm's length as a guide. What we have to do is pay attention to what the market is telling us. If the message of the market is that volatility is starting to narrow, right, and the ranges are starting to tighten up over here, it means that that most people aren't interested in selling, and most people aren't really interested in buying. And we're going to have a narrow range. We're going to have a very frustrating range over here. But with narrowed volatility, or if volatility starts to come down, we'll see the market start floating higher. Okay, I don't know. I'm just speculating over here again. I'm paying attention to what the market is doing, and I'll let the market tell me what to do and how to proceed going forward. But I will also tell you that this is still. I'm going to repeat again. Great time to be raising cash. Great time to be having protection on, because you don't know you don't want to get whacked upside the head by some day, anticipating, oh, well, hey, look, the market's oversold. We had a big down day on Tuesday. The market has to go up. No, it doesn't. Market doesn't do anything but open up. It doesn't have to go up. Doesn't have to go down, right? Okay, that's going to be it. Just letting you know, there's a couple of big data points coming out later on today. We have the jobs report for August coming out tomorrow morning at 8:30 Eastern time. We have a couple of big earnings reports tonight with Broadcom. AVGO is coming out after the close. We also this morning had NEO, which didn't come out. I think they beat, but they guided in line. We also had Toro TTL, which missed, and then a good earnings report from Land's End. Trivia here: Land's End was a spinoff from where? Sears Holdings. Good trivia question for you. So tonight, again, Broadcom, DocuSign, Braze, Samsara IoT, which is the symbol there, Zoomies, which is a retail chain, also Tilly's, and tomorrow we'll have another retail name with Big Lots, BIG. Now, of course, that is in the area of Dollar Tree and Dollar General. Just absolutely, the stocks have been destroyed for the past couple weeks. Yesterday, Dollar Tree just got bludgeoned. And then we had, they're also in the same neighborhood or same trading area as Walmart and Target. So Big Lots, something to keep an eye on, and then a couple of the smaller names. Again, as we move into the next phase of earnings, the next couple of weeks before we get to October, things are going to be thinning out. But there are some important names that are going to be coming out in September, like names like FedEx, Nike, Accenture. So some of those names are going to be popping out. Those are important names for to tell us about what's happening in the economy. So that's going to be it, everyone. Have a great day. Have a great weekend. Trade well today and tomorrow. Good luck. And remember, keep some protection on. Not going to hurt you, right? Not going to hurt you to miss out a little bit and be a little bit late. In fact, it's going to help you in the long run. I'll see you guys all back on Monday morning. That's September 9th, 9/9/24. I'll see you guys back then. If you're in the chat room, I'll see you there a little bit later on today. And enjoy your weekend, and I'll see you guys all on Monday. Thanks, everyone, again, for sending this out on Twitter, on LinkedIn, on YouTube, wherever you're at. Please send this out and share it with everybody you can. Thanks, everyone. Take care. Bye.